Tony Trzynka, you like home builder related stocks, but not home builders. Can you explain that?
Sure. Yeah, we definitely think there's an investment opportunity within housing. We're not calling a bottom to housing, but we do think that things are getting better. So we want to make sure we're invested in that area. And we've chose companies that are a little more defensive derivative play on housing versus the home builders. Companies that have better cash flow metrics, maybe pay a dividend. Home builders will obviously participate, but they're a little more volatile. We decided to go with more defensive play.
So it's a safer way to play home builders. And one stock you like is Stanley Works Black & Decker. Tell me, is do-it-yourself still hot, and will that help this stock?
Yeah, no, certainly do-it-yourself has been one of the areas that have been growing nicely with the general economic news picking up. And Stanley Works bought Black & Decker about 2.5 years ago, and they're still getting synergies from the deal. And the company has great global brands now, and they pay a 2% dividend, and I think about 50 to 55% of the revenue is tied to this do-it-yourself remodeling market. So they will do well as the economy continues to recover, and it's a name we like a lot.
You also like Masco. Now, with all those foreclosures out there, why aren't people just ripping out the sinks and the cabinets from the homes for sale instead of going out and buying new ones from Masco?
Yeah, no, that's a good point, and you know, we're seeing a little of that, but you know, Masco is the world leader in faucets and cabinets, and they've seen a nice uptick in volume with the remodeling. And as I said earlier, it is one of the areas that have been growing nicely. So again, they are really tied to this do-it-yourself market. 75 to 85% of the revenue is tied to the remodeling market, which again, they've seen grow nicely. They pay a 2.25% dividend, and certainly will do well in any housing recovery.
Now, you also like SherwinWilliams. Now, this is interesting because if you can't sell it, you just paint it again. So SherwinWilliams wins either way, right?
Yeah, no, SherwinWilliams has done really well lately. They are about 50-50 between retail, industrial paints. So they're tied to both the multifamily, single family. They pay 1.5% dividend, and they have done real well with this remodeling, and we expect them to continue to do well.
And then finally, Plum Creek Timber. So I guess if they can't sell their timber, then the inventory continues to rise, which I guess is a good thing.
Yeah, no, certainly. They are a timber REIT, obviously. They are the largest private landowner in the United States. They own 6.6 million acres. And what we really like about Plum Creek is that you get paid to wait for a housing recovery. They pay 4.25% dividend, which is a pretty nice dividend. And obviously, as you said, inventory is building up, but once housing recovers. It just grows. And once housing recovers, timber prices, timber volumes, they should do nicely. So it's one of our larger holdings.
Thanks a lot, Tony.
Okay.
This market has
Stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to